Alright, welcome back to PreciseAlgorithmTrading.com. It is Thursday, November 16th, 2023, and I'm going to switch it up a little bit just to keep it fresh. Start here with the markets, and then we'll go to the automated trading systems. So, the S&P today, hopefully you can see that. That's a little green candle. Um, Yesterday was red, today is green, and we're at least walking sideways. So, and we're um, this particular system that I have here draws potential support or um, supply and resistance, or um, I'm sorry, supply up here, demand down here. So, and support and resistance zones. So, this is potential resistance, but not necessarily really that. And because it can blow up and through it. However, we're up against these Bollinger Bands. And we have come back in, and so now it's a question of, do we walk sideways and then pop back up, or do we pull back, and then how far? So, and I think I alluded to this if I didn't draw it the other day, so let's go ahead and draw it. Percent, and put in from here. I've got this thing where it snaps to the high, open, high, low, and close. That looks like a high, and that's the 50% line. So a pullback to the 50% line looks like it would make sense. Um, these yellow dots, by the way, are uh, high bars and low bars, and they're 5-bar patterns is really what they are. So we don't have one up here yet, but one more day that is underneath this high will form one there, because that's what they are. It's 2 bars to the right that are lower than the one to the left, and then 2 bars to the left that are also lower to the one to the right. So that would be a 5-bar pattern, and that would be a pivot, or at least a short-term pivot, which they form down here and back in through here, and they give you kind of areas of value, and so it's kind of where price wants to tend to go to and fall away from. So just like these, we get a pivot to the downside, and then that takes off to the upside. You get one here in the middle that didn't actually come all the way back to 50% of this. So this is a vulnerable position down here at the 50% line. Literally, like, if the markets would go down hard enough, I mean, the retail institutions would want to get a good buy price, and 50% seems like it should be about that. And it doesn't happen all the time, but it is a pretty neat spot to watch for. Literally, you can put a target in there, and when it does come down to there, you can start watching for price to rally back off of it, and, or dip below it and then rally, type thing. So, anyways, that's the S&P. It's walking sideways. I'm expecting that the Dow will do the same, and it did. Doesn't matter if it's a green or a red bar, it's walking sideways. That's still a higher value than the high today. The Russell actually pulled back, and this is a topping candle with a basically big upper wick like that. So we're pulling back, and actually pulling back into this zone would be a potential buying opportunity. We're green and green over here. If we go green back up again, then we could take off from this mid-range, put our stop underneath down here somewhere, and go off of that. Protect yourself in case you're wrong, because the markets are, there's no guarantees. And then you can see here at the NASDAQ, same thing. We got a red candle that's potentially going to be the middle of a 5-bar pattern. So then the IYT looks an awful lot like the Russell 2000, except not near as big of an upper wick here, but the same general principle. Pull back into this zone, potential buying opportunity, And then as long as this ATR trailing stop stays like this, then you could just literally ride it up, kind of like this did. And even if you breach it, if we don't breach the low down here, you could get one of these that looks just like this on the hourly chart, where it comes down a little bit but didn't quite breach probably the pivot that's back off the screen there, and then you take off from there. The markets love to get people out of trades and then take it back the direction that they would have gone in if their stop was too tight. That's literally like what they're doing. They go take your stop out and then shove it back the other way. That's why it can't have too tight of stops. Let's flip to oil. Oil is still down hard today. We got a reversal off of the Bollinger Bands the other day. We're down in that zone. We haven't had another reversal, so I expect we'll need one for this thing to really be done. And this is a major deal since tomorrow's Friday. The ATR trailing stop is under the weekly now. And again, it could reverse like I just showed you on the hourly chart of the other market, but it's a pretty good indication that if it doesn't do that, then we've got lower prices. And we'll probably come down into these 5-bar patterns that I was just talking about and retest these value areas where we had value before. And then it's a matter of, do they bounce from there or do they break down through it? So that's the markets in general. Let's flip to the automated trading systems. And this is the Dow Jones, the YM. So this is actually rallying a little bit here. Nothing to get excited about yet until we get back up to these highs, and then hopefully we could see something like this. This is today's trades, the 16th, right here. So a couple of decent winners and a few small losses. That's kind of what you want to see. The Russell today is actually, I don't think it traded today. Last trades on here are the 15th, and there they are. So it didn't trade. The NASDAQ is falling, and I'm getting tired of it falling. It's similar to this type of a fall, just doing a little bit faster. And so let's get this thing rallying and get this back going. That'd be a good time. So these are the trades from the day. It does trade a little bit more, and you can see there's more red than black on the tape, and we just want to see this in reverse. So, and it will, it'll happen. It's just a matter of time based on the math. So no guarantees, but that's how this works. So now let's flip over to stockcharts.com and let's look at the bullish percent indexes for a gauge of how the markets are. So under the hood, this is kind of buying and selling pressure. So the industrials actually added 2 more X's to the upside, up 5% today, so that's interesting. The NYA minus 0.5%. The transports didn't move. The NASDAQ up 0.25%. The SPX up 0.68%. The OEX added an X today and went up 1.69%. And the NDX added a new X, went up 1.41%. So this thing's above 70 here, and a lot of times you look for a price move above 70 on these, and then a breakdown below 70 for a longer term sell signal. We've got a lot of room here. This can go up into this 80 range, or even 82 and 84 like it has here in the recent past. And so we can have a lot of jockeying around here and still have higher prices come in before we roll over. So and personally, my forecast right now has, I mean, probably some shorter term weakness, but then longer term gains, and we'll see how Friday plays out. Because the bullish percent indexes, when they're strong like this, it's going to be hard to push them back the other way, and you usually won't see that at all in one fell swoop unless there's some major news event that would come out. So we'll keep our eye on it, and we'll go from there. So until the weekend review, take care, good trading, and have a great night.